Welcome to Biz Pulse with me, Cindy Mabi, and if you've just joined us, good evening to you. South Africa will get a brand new bank called Time Digital. The digital financial service received a banking license from the South African Reserve Bank. And this Commonwealth Bank is currently operating in Australia, Hong Kong, and the United States, among others. And as of tomorrow, Time Digital will be legally allowed to operate in the country, offering comprehensive services. And this is the first new bank to be authorized to operate in South Africa since 1999. And is said to offer full-service digital banking. And this bank has a well-established footprint in the country with money transfer services at some grocery chain stores nationwide.
Time Digital's primary focus will be to drive the inclusion of the majority of the South Africans to participate meaningfully in the economy. This we will do by broadening and deepening the access to financial products and services that improves their financial lives, using financial education as the foundation. Many South Africans only use banks at a very basic level, that is to deposit and withdraw their wages. These we call underserved customers. Through the deployment of our digital technological innovation, the cost-effective and full-service digital banking model, we believe that Time Digital will not only transform the banking landscape, but will fundamentally change how South Africans consume banking products and services. An example to this is our money kiosk that is outside, where we run the money transfer product in partnership with Pick n Pay and Boxer. This product is highly innovative in the sense that it will take you approximately 4 minutes to register on the kiosk. You only register once. It is paperless, simple, and easy.
So this is the first banking license issued by the South African Reserve Bank since 1999. Now, they have said today in their announcement that they are not concerned with the competition as much as they are concerned with the customer base. And that is what they're going to be basing the entire banking experience on, customer service, and making sure that they reach out to all South Africans, both rural and city-based. Now, they're going to be a completely digital bank, so no branches. And they say this will bring down the costs of accounts and transactions. They also said that they are aiming to bring down the interest rates of loans of South Africans. Now, at this stage, they aren't a fully functioning bank yet. It's expected to be in full swing by the second quarter of 2018.
And joining us in studio, Tsepo Khadima, political analyst. Thanks so much for your time and good evening. Welcome back home. You've just come back from the Far East. And I hope you're not jet-lagged, and we can talk through this in layman's terms, exactly what Time Digital is offering the underserviced.
Look, exciting times for South Africa because we've seen that the acceptance of what Time Digital, which is really what the story we are talking about today, it falls in the category of what they call the fintech companies. And FNB, I think, maybe is the closest comparison with its e-wallet service. So what Time Digital is going to be doing really, I think, is to bring more competition, which is very much needed, by the way, in South Africa. But also we are going to see that ordinary people will either be multi-banked or those that have not been able to access banking with fintech or digital banking, they will now be banked. And this is a trend that we're seeing globally increasing. I think if you look at 2015, there is a report that recently came out of Forbes magazine that was really saying, well, is traditional banking at risk? And traditional banking, effectively, they are going to have their lunch, breakfast, and hopefully not dinner eaten by these new upstarts that are in the digital banking space. So Time Digital is really launching at the right time. And I think that the bet that is made by ARC, African Rainbow Capital, is certainly going to pay off. Of course, everything else will depend on their rollout of services and to the spectrum of services in the banking field. Will they be able to do, for example, remittances to compete head-on with the likes of MoneyGram, Western Union? Then will they be able to do the person-to-person payments that e-wallet does or Checkers Money Market does, all of those, and also what their fee is going to be. Because these others, by the way, the traditional ones or the more established ones, we see that the cost the transaction costs are that much higher. And I think those are some of the things we are looking at. But certainly it is a trend that we are going to see happening more and more. I mean, acceptance or adoption of digital banking, we've seen the reports in 2015 was around 15%. It jumped to 33% by 2016. You look at China, for example, you've got big companies to think about, Alipay and Tenpay, which is part of Tencent. And certainly what we are seeing in terms of cardless, cashless banking out of China has surpassed anything that we have seen globally. And the richest man in Asia, Li Ka-shing, has just teamed up with probably the second richest man, Jack Ma, to form or launch digital banking into Hong Kong, and they're looking to go global. So this is certainly the new normal in banking.
All right, let's get a word as you sing the praises of Time Digital. We have Turaya Pandey, Time Digital, the Commonwealth Bank, as their spokesperson. Good evening to you, and thanks so much for joining us. Congratulations are in order. As our analysts said, this is virgin land, and you positioned yourself quite well.
Thank you very much for having me, and thanks for the congratulations. I think Tsepo is completely spot on many of the points that he raised. I think it is true to say that the time is now right for digital banking to enter into the South African market. We've certainly seen an increase, particularly of smartphone users, up to 18.5 million this year alone. And so there certainly is opportunity for a new player to come into the market. I think it's also important to say that competition, particularly in the banking sector, because the banking sector is significantly, what you'd consider to be slightly, in terms of the economy, slightly bigger than many of the other sectors. So I think it's important that competition comes in, particularly for consumers in South Africa.
Turaya, but you spoke about 18% at least of internet connectivity. We're not even going to touch on data, but there's certain, I'm sure, infrastructural issues or concerns that you would have as to how wide is your market share going to be in the first phase of this rollout?
I think earlier, Tsepo also spoke about it will depend on what we offer to our customers. We firmly believe that we are going to be offering our customers a better experience from a customer perspective. We believe that so many customers are underserved. So 77% of adults in South Africa have a bank account, but we believe that many of them are not serviced, that they're chronically underserved. And we believe that what we will bring to the market will be different. It's paperless, it's easy, it's simple, it's something that can be integrated with their lifestyle. You may have seen in the press reports earlier today that we have a partnership with Pick n Pay. We've entered into a 10-year partnership with Pick n Pay to roll out some of the financial services that we are speaking about. So our customers will be able to go to a point of presence in all of their Pick n Pay and Boxer stores. So we certainly believe that we are able to reach customers across the country and also to try and bring a new and innovative banking solution that will meet their needs.
All right, please stay on the line, but just in terms of the national imperative, we always talk about the inclusion of those that have been disenfranchised economically, not only from a consumerism point of view, but also ownership, management and control. In the digital space, is that a little bit more trickier to implement?
Well, not really. I think what we're going to be seeing now is going to be a lot of nascent companies, new companies that are coming into the market that are really going to be competing. What we are seeing here is that Time Digital is effectively now going to be a pioneer in that space. And as it's pioneer in that space, it's going to buoy other newcomers to be able to come into the market. I think traditional banking as we know it certainly has to either transform very quickly or is going to really see their, the size of the market share shrinking a lot more because the costs are that much higher. So they've got that challenge. But however, what we're going to be seeing, I think, we're going to, in the case of South Africa, the imperatives, of course, are that of what extent do you have a transformation focused or biased ownership in terms of the demographics of the country. So I think if I look at Time Digital as a 90% owned by Commonwealth Bank of Australia, that's what we understand. I wouldn't be surprised to see that either African Rainbow Capital or African Rainbow Capital with other investors, and would be black, we would hope, that would want to increase their share in Time Digital, because it's really a new space, and perhaps maybe that's the space whereby the barrier to entry would be that much lesser than, let's say, with the traditional banks that by and large are not owned. So I wouldn't be surprised to see that Time Digital's shareholding might continue to increase, in terms of black ownership, but also we can expect many more other companies that I think are going to be making an announcement that they are entering this space of digital banking, because fintech is really where the future is going to be, but also a great time for entrepreneurs. I mean, Time Digital, we are made to understand from the press reports that it was actually developed here in South Africa at the early days with the incubation funding from MTN, the mobile phone network operator.
All right,
obviously,
maybe let's
they were
backtrack.
ahead of time, but I think Time Digital is no different from 2020 Bank, which was a digital bank, however, 15 years ahead of its time.
Yeah, for those that may have missed the press, Tureya, maybe just speak us very briefly an executive summary of how this transaction came about, the underwriter or even the support that had made this possible.
Yes, so Tsepo is right. It was incubated initially. It was actually with Deloitte and MTN. In 2012, Time was formed, so not Time Digital. The digital came about only today when we launched, when we announced the bank license. But Time was formed in 2012. We entered into a partnership with MTN and later with Pick n Pay. The product that we had was essentially a money remittances product, but it was an actual bank account that could be opened paperless. I think that's the technology that attracted the Australian bank called CBA, Commonwealth Bank of Australia. We had developed technology that they found innovative, that they believed in, that they believed that we could not only build and develop in South Africa, but that actually it could be kind of taken into other markets as well. So it's interesting about what Tsepo was talking about, just the reach of fintech. So we had already, we've already exported one of the initiatives that we've built in South Africa. In Pick n Pay at the moment, if you go into the stores, you'll find a device, we call it the money transfer kiosk. It is only for money remittances right now. We've actually already exported that to Indonesia. And today, with that technology, you can open a bank account paperless, simple, within 10 minutes, under 10 minutes, actually. And so that is how we attracted the international bank to invest in us.
All right.
Time then acquired us. Let me just finish quickly. Time then acquired us in January 2015. And we then went and submitted a bank license to the South African Reserve Bank in October of that year.
Yeah, I think what I want to establish is in terms of the ownership, the organogram, and that technologies and ideas are not necessarily exported to the benefit of multinationals or even investors, that it is still the preserve of South Africans in terms of the intellectual property. Rights.
Yeah, so the intellectual property sits in South Africa, but of course, as Commonwealth Bank is now 90% shareholder in the business and had acquired it entirely with obviously the 10% shareholding that ARC had acquired along the way. Surely the innovation that we're building and developing here is for South Africa, but I think that's the amazing thing about globalization and the fact that fintech companies have been able to kind of reach beyond just the borders of where they exist, but actually to take their technology all over the world.
Yeah, just hold please, Tureya. You were talking about the opportunities for smaller players, and we know that this being the fourth revolution, if you will, in technology, how ready are South African entrepreneurs in taking up this opportunity? Or maybe where are examples of where they could fit into or plug into this platform?
Look, if you're in a country which largely has been underserviced, but also a young population, for example, I was asking my 16-year-old daughter if she would go digital banking. Of course, she's very ready to do so because that's really the young people. So she'll move from having just an upstart in a traditional bank account, and she would easily move into that. We've got a lot of young people in South Africa that are technology savvy. So effectively, the market of the future in terms of banking and financial services financial services in the broadest terms. I see it going digital, I see it going, as I say, in the fintech space, and the adoption will be there. For example, we know of the success of M-Pesa in Kenya. And of course, the model of M-Pesa in Kenya has not been replicated elsewhere. We know that it was attempted here in South Africa, a tie-up between Nedbank as well as Vodacom, or Vodafone now, and that didn't quite work. But again, some of these things, you find that timing is everything. As they say, time digital. But timing is everything, because if you are just at the right time to enter the market, the Bank 2020 was effectively a pioneer in this space of fintech, but it was 15 years ahead of its time. Now, I think it's the right time to have this, and I wouldn't be surprised that we'll have a lot of young people that will see them embracing this technology, but also will bring about competition. I think that the guys at First National Bank also, they must be taking note of what Time is doing and be watching the success of Time very closely, because they also have got their own fintech application in the form of the e-wallet. And as I say, more will enter the space. The issue, of course, is going to be cost. If you can reduce the cost, we know that Basel III is coming into effect next year. So the traditional banks are going to have that much of a bigger burden in terms of compliance and regulatory, the regulations. So the costs as they go higher, that cost is going to be passed on to the consumer. So perhaps this offers by far the best opportunity to reduce banking costs, which everybody else has been worried about, but also to bring about the convenience and the accessibility, because it moves from a bricks and mortar physical bank to digital, which is on a smartphone. And the smartphones in this country, we've seen that they are increasing by leaps and bounds every year. So the time couldn't have been more right, but more competition, of course, is what we need. And the other traditional banks, I think they too will be either investing in similar technologies or similar companies, because they also are sitting with the same headache. Move from traditional to the new generation.
Yeah, Teresa, so how do you mitigate competition? While we say it's healthy to give consumers an option, the cost aspect thereof, as Seppo referred to, how then do you keep your costs pretty much minimal to the benefit of the consumer and still make your profit?
Well, I think the first point is, of course, the bricks and mortar. So we don't have bricks and mortar, so that cost on its own is a significant cost for many of the more established banks. The other thing also is that the core banking platform that we're looking at, it does not have any of the legacy issues. So many of the other banks have old systems that are not necessarily talking to each other in terms of having a single view of the customer. You'd find that if you have a bank loan and you have a transactional account with the same bank, you cannot get the same information at one particular point in time. While that has evolved and it has changed, some of the banks are still struggling with that legacy issue, so we don't have that. We certainly have a model that it is considered to be relatively low cost in relation to some of the other banks. I have to bring in a point here about what Seppo had mentioned earlier. So while we may not have the bricks and mortar and the other legacy costs that we need to consider, one of the things that the Reserve Bank has been pretty clear about with us has been the issue about risk and compliance, and that that the bank license that was issued to us is not a digital banking license, it's a banking license. And we therefore have to ensure that we consistently adhere to all of the banking regulations, both domestically and internationally. But having said that, coming back to the issue around affordability, we certainly believe that together with the bricks and mortar costs that we don't have, plus an affordable core banking model, we can certainly bring down the cost to serve.
Okay, but you say bring down, I mean, if you look at the money market, for example, it would be 10 Rand or whatever, a service fee to send remittance or money from one person to another. Sure. So how would you compare that? I think it's fair to say that people that it's not only a question of cost, particularly for consumers. I think it really is about value and what it is you bring. The money transfer capability that we have in Pick and Pay at the moment, what we offer, it's a paperless environment. It's also once off. You register only once. You don't have to go with your ID book every single time. It has a biometric capability, so you only use your fingerprint if you need to log onto the system, and you can go to any Pick and Pay till point. You don't have to stand in one queue.
for half a day or a couple of hours in order to do your money remittance. And so in terms of what we offer, I think it's comparably, it's slightly less than what our competitors have in the market, but it's not necessarily significant in terms of the pricing. I think what we do offer is just the convenience of not having to go with your ID book, register every single time you do a money remittance, which is the case currently with some of the competitors out there.
Yeah, and Tsepo, when it comes to the innovation being at risk of job creation, because if it's paperless, there's already a system. Pick n Pay has got his set of staff members who will just take on this particular process. Is there a real danger to creating less jobs because of the technology?
Not quite. If anything, I think innovation or innovative technologies, they bring about new industries that sometimes we haven't even thought about. So that shouldn't, in any shape or form, I think, cause concern that, oh, we've got high unemployment. If anything, is opening up new industries and new applications that people will be able to really access financial services. You know, convenience, cost efficiency, and accessibility. I think those are key. That is what is required by the consumer everywhere else. For example, now if you look at, for example, somebody who's sitting in a village, you know, my home village in Ramatala, it's about 70 kilometers. It's not like my hometown of Tembisa here. But my home village in Ramatala, 70 kilometers from the nearest town. If you send somebody money by e-wallet or any one of this, they have to get onto a taxi. The cost of transport by taxi to go to that ATM to be able to draw that money is prohibitive. So if you can be able to have a technology that takes away that burden, most certainly. If you can be able to have a technology that now goes paperless as well as cardless or cashless and cardless, it then means that you can be able to remit money to your relative, person-to-person payments, in a village that is remote, and that person doesn't actually have to hold cash, but they can be able to use their digital banking platform or application to be able to buy goods and services. And once you go in that, it brings up, it lowers the costs and therefore efficiencies in the economy. And that innovation is really the benefit that we are all looking at, that type of innovation. So those are the things I'm looking at. In terms of remittances into neighboring countries, for example, I don't know if Time Digital will be doing that. Right now, we know that the costs are as high as 10%. So if you are able to bring in a technology that can bring the cost, let's say, to 2% or 3%, and then also not have the high markup that we are seeing other traditional remittance companies charging, the markup on the exchange rate, you bring it lower. Again, the people, they benefit. You have more money circulating in the economy because of the efficiency. Right now, it's actually a leakage to the economy. So technology innovation must be welcome at all costs. And I'm excited about this.
Yeah. All right, very briefly, Turaya, just a quick response in terms of the comprehensive services that you'll be offering, the ease of access in remote and far-flung places.
So we have a partnership with Boxer, and that will be one of the ways that we'll be able to reach communities. But as I said earlier, it is a digital bank. We do expect to onboard customers digitally, but obviously the partnership of Pick n Pay and the fact that they have a very strong rural footprint will allow us to access consumers in rural communities.
All right. Thanks so much for your time. Much appreciated. Again, congratulations are in order. Torea Pandy, Time Digital, the Commonwealth Bank that's will legally start operating in the country, and Mr. Tsepo Khadima, political and economic analyst, joining us in studio. And while we're on the banking story, of course, there have been other developing news. The Oak Bay versus the Bank of Baroda case was heard at the North Gauteng High Court. And on Thursday, today, the court agreed to allow 2 days for the case to be heard after Oak Bay requested for an advancement of the scheduled hearing in December. Oak Bay is seeking a 24-month notice period from the Bank of Baroda before their accounts are closed. The Bank of Baroda is the only remaining bank that still has active accounts with Oak Bay companies. Oak Bay argues that the 2 months given by the bank as notice were not sufficient to make alternative arrangements. And that's where we'll leave it for the moment. Do stay with us for the latest news and sports update.